tuning in today. Don't forget to like, subscribe, and don't forget to make sure that if you have your comment section on. Today's show, I got a couple things I'm going to talk about today. I have a couple of stocks as well. These stocks are stocks that are new. I'm still doing my due diligence on them. I know last Wednesday actually, I talked about SPWH and DQ. I'm still doing my research on those. Once I finish my complete research, I ran into some snares, haven't gotten some calls back from some of the competition to those. But today I'm going to talk about an IPO that actually hit today. A very interesting IPO. I also that stock symbol is GENK. Again, GENK. I'm going to be talking about that stock symbol today. They actually did their IPO today. They are a restaurant business, and one of the interesting things is I had to learn when it comes to new IPOs. But I'm going to just, put this on my watch list, begin to do a little research on it. Also, Twin, TWIN, and then SOEOSEO. One of the things that I will tell you, I know I said one of the things a lot so far, but I'm just kind of deep diving into these things. GENK, which is GEN Restaurant Group. This group itself is a Korean barbecue is one of the largest Asian cuisine dining restaurants concepts by total revenue in the United States. So when you think about Korean restaurants, they're one of the largest, founded by two Korean immigrants. We have grown over the last 11 years to 32 owned restaurants as of May 26, 2023, by delivery and engaging in interactive dining experience where our guests serve as their own chefs. We offer an extensive menu of traditional Korean and Korean American food, including high quality meats, poultry, seafood, mixed vegetables, all at a superior value. Our restaurants have modern decor. Live Korean K-pop music plays in the background, and it is embedded grills in the center of each table. Our food is served by a family style and request guests to share and coordinate their cooking responsibility, which fosters more meaningful interactions than traditional casual dining. As of May 26, 2023, we operate 32 locations across California, Arizona, Nevada, Hawaii, Texas, and New York. This is a Korean new company, the largest of all Korean, 32 locations across California, Arizona, Nevada, Hawaii, Texas, New York. It IPO today. The current price is actually $15.14. It's up $3.14 from its IPO price of $12 even. So it was priced at prior to going public, $12. It's up $3.14, 26.13%. One of the things that I look at, do I have exposure to restaurants? I mean, I can tell you this. I'm not gonna, exaggerate on this. I missed the mark when it came to Chipotle. I just totally missed the mark. I didn't at the time Chipotle came out. I wasn't really looking at that space. As you guys know, K-pop is very popular right now. But this one I didn't ignore. I'm only speaking about it today because of IPO today, but it was on my watch list. It was on my charts. I didn't kind of put that out there. I didn't think they started doing their paperwork for the IPO back last year, but in May they kind of finished everything off, and then they IPO today. When you have things in your watch list now, in the body of this video, you would notice a couple of key indications. I'm even going to write up a little bit about the importance of a watch list, at least for me, the reason that I have it. And if it wasn't on my watch list, I would have missed this opportunity for to go public. I never really talk about what positions I do or I don't take, but I do talk about what's on my stock list, and I normally go over what I've done, how it affected me with my private group. I don't really kind of go over that with anyone else. I don't. Again, I always tell you, do your own research. Don't leverage me for clues or what you should do. Everybody's personal goals personal goals are different. Our goals are not the same. My exposure at this particular point, my positions that I look at is I'm young. I don't have a desire. I'm not at that point in my life where I'm trying to, for me, I'm not trying to take the position of winding down. I'm still growing everything from, I tell you, if I have $1, I want to make two. If I have three, I want to make six. So I'm still growing. So on today's show, I want to talk about this company, this stock, how important it is, and then the exposure of it. So I got my current watch list. You see that in the body. I'll talk about again. But overall, GENK went public today. Now, if you're not familiar with doing IPOs, I always tell you this: there's a lot of risk associated, and if you're not familiar with investing early stage of an IPO, there's a couple things I had to learn. For me, I have invested early, and when IPOs hit the retail market, that I could acquire them in my own portfolio. What made it interesting for me, though, when it comes to the GENK today, as far as the fact that they IPO, was, K-pop is very important in the United States and abroad. It's just something that's, we go through this back in the day in the regular American music, whether it was country or anything else. You would have saw that used to back in the day you had acapella groups. A lot of people doing acapella. Then from acapella, they went to go do group. It was groups, male and female, throughout the early '90s. Then you hear them now called boy bands, which is nothing but a group of singers. They call them boy bands, girl bands. But now you hear K-pop, which is, again, these are the same things it was before. It's a group of individuals who sing and dance. I mean, the music genre may be selected, but it's not nothing new. And the reason that I point that out is because as you take the position and you're looking at your overall. Today's show, I'm just talking about, again, what I'm going to add to my watch list, what I'm not going to add to my watch list, what positions that, I'm still looking at, the reason it's still on my watch list. When it comes to allocating resources, anytime you're going to buy stock, you need to understand it's always based on what you have. I tried to never build my watch list over positions I can't afford to buy. So if you're going to build a watch list like I do, it helps me stay focused. It helps me manage my risk. It helps me kind of focus in, because it's a lot of stocks. It's a lot of stocks, but not all stocks are good for me. I'm in a growth sector. I like to get in. I like to get into stocks that I can grow with, and they kind of fit the money that I have. One of the examples early on I was always told is, whenever you're going to go into buying stocks, make it to be either a 1/4% or 50% of your raw income, which means if you're able to save 50% of your paycheck, if you get paid 1,500, if you get paid twice a month, then you make 2 grand, 1,000. And that was something I was told is just as a benchmark to kind of help me out. That means the worst case scenario, that means every 90 days I need to be able to have half my income so I can actually take positions to generate more income. And over the years, I have followed that and have not followed that. But the key is having something to start from. So on today, let's jump right into it. Let's look at the factor I'm telling, and then I'll do my due diligence. One of the mistakes that I made before was people will say, okay, this is on his watch list, but how did he come to that determination? One of the clues, how do I come to that determination on my watch list, is based on what I have available to allocate. If I don't have access, if I'll give you an example here. If I'm going to buy a stock that costs $30, do I have $3,000? And if the answer is no, then that stock on my watch list is expensive. Well, what if it's, $100? Do I got 10 grand? The answer is no. Now you may say, because I'm gonna give you an example of a couple of benchmark. My first benchmark, and always will be um, what I have in savings starts off my opportunity to do allocations. Again, what I have in savings. If I don't have 1,000 in savings, and if I do have 1,000 in savings, $1,000, a $10 stock or less, I can buy. If I don't have $1,000 in savings, 500, then I need a $5 stock or less. That's just benchmarks because that's what I can have. I don't try to build onto my watch list, and I know other people do, but I buy in groups of 100. So if I can't buy a group of 100, then I don't buy the stock. I know that there's several people who go out there and buy 10, 20, 30, 40. But I'm actually have taught myself to be disciplined in that regards. And it may not be for everybody. Someone who has 20 to 30 shares of a stock or in a better position than I would be, because they actually entered the position, and I'm still trying to put together the discipline to allocate the funds to be able to take the position at buying 100. And that's the reason that I only built my watch list. Again, I only built my watch list around what I actually have access to allocate. If I have 2 grand, then I can look at a $20 stock or less. I can buy two 100 shares of $10 stock, or 100 shares of 20, or four, $5 shares that equal 2 grand. So that's the position. So a little bit of a hint when you begin to see my watch list, you're like, well, I noticed he doesn't have certain stocks in his watch list. Well, here's a clue. That's because it's not the money that's either the positions I already have and what's left over does not meet the criteria. So I built my watch list over what I have access to, not what I have to go and get. It makes it easier when you're defining it that way for me. And again, this watch list that I am creating is all about what I have access to, how it would help me. Now, I recognize that when it comes to stocks and it comes to positions, when it comes to how I will build out my portfolio, it's really for income. Um, I am a 12-month annual holder, sometimes shorter than that. So sometimes I could be a swing trader, but the overall goal is really to allocate in a 12-month basis income, money that I can include on my 8949 when I file my 1040 long form. Now that's important because most people are doing, if you're gonna, do stocks, I really don't do stocks as a deferment mechanism. I do it as an integrated mechanism, which means I will declare income in a 12-month basis. Uh, it's important because it also drives my focus. Now, as I mentioned to you about this new IPO, GENK, and it is called Gen Restaurant Group Inc. It's in the United States, so it's a United States company. It opened up today on the NASDAQ. Real time price right now is $15.14. It's up $3.14 since an IPO. The actual price that was priced at was 12. It's now trading at $3.14 higher. At this particular time, I have it on my watch list, and you will know calculated down. Another stock that I'm doing the research on, and I'll continue to do now. This is one I actually I don't have any exposure. I did again. I mentioned that I missed Chipotle, McDonald's, the Dairy Queens. All of those at the time I was focusing other things. So I did have a little bit of dollars and cents, pounds and pence set aside for the next great restaurant swing for consumers that are looking for. Now, this may or may not be it. Time would tell. Uh, the question will be: am I willing to allocate $15.15, which is $1,515 to buy 1,000 shares of this, or there's a better opportunity? Well, let's see. Let's see. Okay, another stock that I have on that I'm going to be doing due diligence on is going to be called Esso Energy Enterprise. Now, Esso Energy Enterprise is designed as a manufacturer to deploy battery storage solutions in utility, commercial, and industrial and renewable energy market in the United States. So this is one of those green companies. It has to do with the storing of renewable energy. It offers a stationary battery station solution. So it does attempt to compete with Tesla when it comes to, and we know that Tesla's superior. We see recently that Ford. We're also seeing that other EV companies are utilizing Tesla's position far as their gas. I don't want to call them a gas station, but when it comes to their charging stations, I just still don't see it as a gas station traditionally. I haven't seen one of Tesla stations yet that had a store attached to it where you can go in. I noticed that at regular gas stations, not far off the path, close to a regular gas station, you'll find an EV. I do realize that. But as far as a conventional gas station that has a convenience store, either an automotive department or a repair shop, and also provide fuels, some states still have state inspections. The state that I'm in, they only have it at the time that you purchase the car. And if it's outside the state or it's a used car, you got to go through the inspection process. But we don't have a yearly inspection. Probably should. I know that some of these cars on the road are pretty dangerous in the state that I live in. Like, how are these things even driving? The Esso Energy Enterprise was founded in 2008 and is headquartered in Edison, New Jersey. One of the key things I'll tell you is I'm still doing my due diligence on this one, just same way I'm doing it on SPWH and DQ. That's because the competition has not gotten back to me yet. So I'm not going to do a full disclosure on this company. I will tell you they have 333 employees. The CEO's name is Joseph. Uh, let's see something else interesting enough that I can pretty much tell you guys about that makes sense. Not anything else at this particular time that I see that I want to include at this time. What I will say is interesting enough. It's an interesting company if you're not exposed to EVs and you're looking at something to integrate. Again, a lot of people like use the word certification. I use the word integrate. I use the word integrate because it does play out when it comes to incorporating. I mean, I'm a family man, so I have children, so I integrated not just being married, but also integrated children into our relationship. They're not diversified; they are integrated into the household. The same way, if you have one automobile, I have two, so automatically there's two. It's a family, it's a husband and wife and a family, and I integrate it. So for other individuals who are thinking about that opportunity, I tell you, these things you have to think about over time. How do I want to integrate these programs into the overall portfolio? You know, and again, don't forget to like, guys. Appreciate the comments. Um, Now, on the other side to the equation, it's not just about building a watch list. It's about putting a watch list together that will make me profitable. That's one of the unique things about doing a watch list. It's not just building it and having it. It's will it make me profitable? And each year I have an opportunity to say it made me profitable. As far as this year is concerned, my watch lists have made me some profit. At the end of the year, I kind of go through that as I will start going through that aspect at the annual basis because it makes it easier. But again, you have to take in consideration that this is a marathon, not a race. This is a practice. Each day and every day, I'm getting a little better and better at analyzing what's on my watch list, taking things off, replacing it with something else that it may be best for me to allocate my funds that way versus just keep continue having this because with a watch list, it gives you laser focus. The other thing that one other company, so right now you heard me talk that I'm still doing the research on SPWH, DQ, EOSE, and now Twin. Twin is another one I have, which is called Twin Disc Incorporated. Now, Twin Disc Incorporated designs, manufactures, and sell marine and heavy duty off highway power transmission equipment worldwide. It operates through two segments, manufacturing and distribution. The company products include marine transmissions, uh, drivers, surface drivers, propellers, and boat management systems, as well as powerful shift transitions. You also got hydraulic torque converters and power takeoffs, industrial clutches, and control systems. It also provides a non-twin disc manufacturer project. The company sells its products through a direct sale force and distributor network to customers primarily in the pleasantry craft, commercial, military, marine market, as well as the energy and natural resources, government, and industrial markets. Twin Disc Incorporated was founded in 1918, so this has been a while. It's been around for a while, and headquartered in Wisconsin, Racine, Wisconsin. So they have 761 employees. The CEO is John Batten. One of the other interesting things about this company is that if you want to look at having military, at least having a company that works with the military, and you think about that, then you may think about Twin. I mean, at least for me, I don't have any. When I think about military companies, product wise, that are non-technology, because right now, when you're dealing with companies that may or may not deal directly with the military or deal with the civil service of the military, and they consider tech, as long as interest rates are being increased, and Powell mentioned that later this year in the third or fourth quarter, we should expect to see higher interest rates, even if it's at 0.25%. That meant that, again, technologies, real estate, finance are all going to be affected by higher rates, also blocking that reality of you going out and financing. So on today's show, I wanted to make sure that I at least allow you to know that Twin, a new IPO that came out, I'm looking at an SO, SPWHDQ. These are all I'm still doing research on. I'm still building around that growth sector and also kind of moving away from a lot of companies that are cyclical as well to balance off my personal watch list and portfolio. Now, growth is going to be where I could probably make the most income in a 12-month basis. But I also got to keep in mind that they expect two more interest rate hikes. This pause was a pause that was done strategically. It didn't mean they stopped raising interest rates. We still have another year of Biden and being in office. And if you're in the growth sector like myself, your stocks are going to be lowered because of that. So if they raise two rate hikes, and then in the last year of Biden's administration, we're going through his reelection. We don't know quite sure. how it'll play out to the candidates are on stage, and then we'll make our final decision. But if you're in growth section, you really don't want to be voting again. You don't want to have to vote for his type of policies. It has been a crushing blow. At the same time, it has been an opportunity. If you had cash on the sideline, honestly, you could have really took some positions and built into a large stake, maybe one of your largest stakes. For me, I still have some stakes. I'm building into those stakes. I need prices to remain low on my watch list because I'm in a growth sector. And I like to, when the market turns and they start cutting interest rates and we go on a cutting and they go and they cut 2 points, 3 points, and we get back to interest rates, where you can buy a house at 5 or low, I want to make sure I'm positioned well in that to make the money that I need to make. And this is the season to do it. We're still in an economic downturn. We've seen that the European nation in their market, they actually increased rates. So the United States did a pause. The UK did an increase of a quarter base points. This all plays out. So people have asked me before, Primo, do you think there's still an opportunity for a new person to get into the market? I would tell you that, in my opinion, you want to do your own research, but it's always an opportunity. There's not a time that I don't think anybody can't go into it. And you say, well, how would you determine that? What gives you any background? This is my personal opinion. That's the reason I tell you do your own research. But there's also another clue. Let's just look at it this way. If a person's working right now and they have a 401k plan, they're constantly adding money and increasing their stake in whatever portfolio that they're investing in, whether they're doing growth, whether they're doing cash management. But most of them, that's normally when you're moving around your portfolio. Then you see those type of situations happening. So for me, I would say yes. There's always an opportunity for you to continue to build in. I put some information down the body. I definitely will go into a deeper dive on these companies and strike out. The only one that I did add, my current watch list still remains the same, other than I added GENK. I did add that. And that was because for me, I do want exposure to the next great restaurant. As you know, people are going to be eating until Jesus come back. Then people will be eating after that. So the idea that consumers are not going to go out and spend money on, purchasing food items, even in the recession that we're sitting in right now, I will say is hubris, because I have purchased, a $10 KFC meal. I spent $12 at Crane. And again, you just want to look at this position here. If you're new to the stock market, it's a marathon. If you have already been in the stock market, you've been seasoned, you're a seasoned veteran. A lot of times you come across these type of channels, and what you're looking at, you may even prejudge and then make that fundamental mistake. I would always say, don't prejudge, because you're really looking for idea generation. That's the whole goal of a watch list. It's just idea generation. In the process of having an idea generation, you're looking at, what am I missing that they may be seeing? Because whenever you're going to trade stocks, it's a lonely road. It's just you. I mean, I sit down at times with my wife and we may discuss certain things, but overall, building a portfolio and a legacy, taking a position, building into one, having one that you take and it capitulates, the price, drops. All of these are lessons. They're not hard lessons, to be honest with you, because everyone, even I had to accept going on that the hardest lessons is not actually learning anything. The greatest lesson is being able to learn, adjust, and die. So I'm always going to stay in the learning stage. I suggest that everyone begins to do two things. If you're ever going to start your own watch list and you're always going to manage your own money, don't go through the process of hoping that someone else can tell you what's best for you. It's truly subjective. I mean, it really is. There's individuals right now who have $30,000 and they want to buy $300 stocks. I mean, if you have $30,000, you can buy 100 shares. There's a lot of companies out there. I don't normally talk about those because I'm not spending there. I would rather have more shares than 100 shares. I mean, if I can have buy a stock for $30, I'll have 1,000 shares. The old adage is more is better than less. 100 shares versus 1,000 shares, there's a greater opportunity. At the same time, entry is important. I mean, if you enter the price and it drops down, then I get that. But overall, it's a marathon. So if I like a company, I can see myself owning it for 10 years or a minimum of 5 years long term. And if I can't enter a company and see it that way and be willing to go through the ups and downs, price increases and then price decreases, I won't buy it. At the end of the day, it's about income. So even if I end up with it, the question is, can I make compound income in this? Can I make income plus interest? Can I make income plus dividend? Can I make income plus dividend plus interest? All three. The power of four includes me. What type of leverage or what type of money I have access to? These are all common threads that you would need to know. So I encourage anybody, continue for everybody's out there managing their own money, for everyone out there that's managing somebody else's. It's a marathon. It's not a 100-yard foot race. There is no such thing as a stock tip. There is a such thing, though, is buying a stock that you don't fully understand and you're not prepared to own it long term. I think that's what hurts a lot of people. Now, that doesn't mean that you should have an income goal. And anytime you have stocks, there should be a goal that you expect. I had to learn early on that I'm never going to buy at the peak. I'm never going to buy at the low. I'm not going to be able to buy before it's on the retail market. I can only buy it after it's on the retail market. And since I am doing this as a retail trader, I think it's important to notate that as well, that I'm using this in my own personal portfolio. I'm not using this in my company portfolio or anything in that nature. It's my own personal portfolio. So when I'm building around and beginning to develop a watch list that makes sense and give me more income in a 12-month basis other than the income I either get from salary or hourly, that means that I'm allocating funds to generate money in a 12-month basis. That makes sense to me. People have said, well, what about your retirement? Let me just put it in this regards. If I build now, make income now, build a large stake, and you end up going from having 100 shares to owning 10,000 shares, and that 10,000 shares pays 50 cents, well, we could do the math. That's $5,000 a month. If my current job that I'm working at, I'm gonna make it three, I am retired. I'm retired. Now, most of us only look at retirement as something that is associated with Social Security. No. Have you ever read the book Rich Dad Poor Dad? Or have you ever played the game Monopoly? The game Monopoly is not age driven or cash flow stewardship game. Is, when you look at cash flow, sorry, not cash flow stewardship, but cash flow game that Robert Kiyosaki built, none of those are based on age. I just want you to know it's based on the way you allocate funds. If your person's in real estate and they worked as a janitor, or they worked as a postman, and he makes enough money through passive real estate that he can leave early from being a postman, then again, I'm look at things from a perspective of a business construct versus an individual construct. Individuals, you'll wait until you get a retirement at 59 and a half. But if you're 30, 40, 50, or 60, and you can make just enough money as if you went to work, well, your taxes will, again, I'm not the IRS and I'm not an accountant. So let me just put the disclaimer out there. But if you pull up the IRS page, and when you look at it and you review it, you will notice that the IRS states that if you make money from paper assets, your personal income, and you make it from the stock market, you'll be taxed less. If you hold the stock over 12 months, you're going to pay 10%. If it's less than that, 9 months or less, you're going to deal with a 20% tax bracket. Well, if you're making 100,000, pull up the IRS, pull it up. You'll see. If I hold that stock over a year, even if it's dividends, it's 10% no matter what. So you take that position. I get paid tax less just from living off of my own money than if I actually lived off of a W-2 job. So that's one thing to think about. This is all the factors of understanding about retail investing and how to allocate funds in a way that benefits you and anyone else. Again, if you never sat down and really watched it, I started this watch list back on February 1st. There were 3 other companies back on February 1st. 2 companies, which one was DraftKings, the other one was a firm, and the other one that was, let me go, and I should know, it's 3 of them. All 3 of these companies have had the chance to actually meet the goals that I had set. So when I set those goals, it wasn't anything out of the ordinary. I mean, I literally looked at these stocks, built my watch list around it, did my own due diligence, talked to the competition. It just wasn't me just looking at a stock and kind of just saying, it was really taking that position to do my due diligence. So we looked at DraftKings was the first one, Shopify, and Affirm. Those were the three positions that was on my watch list earlier. And they all hit the mark that I priced it as. Now, some of them went above that. And this is that part where you go through a greed and a fear cycle when you're building a watch list, or just as a regular person who is a long-term holder of assets or a swing trader or a day trader. The best way I can tell you to allow me to be effective, efficient, and functional in the stock market was to take my emotions out of it. So I price things. I just look at it and I price it. I said, okay, if I buy at this, and I exit at this price, so I'll use GENK, just a new IPO. It's a 32 locations. It's a Korean company that play K-pop in the back. If you've probably been in Japanese grills and you've been to Kabachi grills, they have their ambiance music, but they don't have the K-pop. And since that's popular right now, this makes sense. It's a Korean company, and they do K-pop in the background. They have a table in the middle, and you can participate in helping cook your food if you like, or they can have their chef cook it for you. But regardless of what, it's an interactive process. They IPO with 32 locations, and I take the position to ask the question: do I want exposure to the next great restaurant chain? I missed out on Chipotle. I missed out on Starbucks. I mean, Starbucks is a beverage company, but I missed out on them as well. And part of missing out on them doesn't mean that I missed anything. I still make money in other areas. It's just that so far, I didn't never hold any McDonald's stock from the time they did it. I felt at the time I missed it was too expensive. When I had a chance to buy Chipotle, it was already over $100. That wasn't going to happen. I wasn't going to spend 10,000 to own 100 shares. Then it went up over $300. You said that's the end of that one. I just missed the opportunity. And as long as you're going to be in the market trading, you will miss opportunities at times. Period. You will miss them. Just get used to saying that there's always an opportunity around the door, but you have to look at what funds you have. So on today's show, I wanted to talk about the GEN IPO that came out. Restaurant Group, the GEN Restaurant Group came out with so I got that on my watch list. That's been added. My other things that's on my watch list that still remains, not before, which is Norwegian Cruise Line. Again, travel is going to be important because cruise lines have been suppressed because they need low interest rates, and high interest rates hurt them. So that's going to be. I have Coupon, another Korean company. It is in Korea. It is similar to. I would say that is similar to China's version of. China has as well. They have a similar company for corporations where you can go and buy things. And CPNG is actually Korea's version of that. I still have JetBlue as an airline. Then I have a IT company called BBAI, Bear. Then I have Beyond Meats that I added since it capitulated. I think it's oversold, to be honest with you. Beyond Meats has been tremendously oversold. And that's a normal thing. When something IPOs, and it's overpaid for it, you're going to have a regression. So, and then I also have Bumble back up there. Now, I can tell you that, since the feds came out and mentioned it, we see that a firm may be back on that watch list. There may be an opportunity for me to bounce off of that, but I'm not going to be as I would say, I'm not going to be as aggressive because I've already made the money on a firm. It's trading right now at $15.15. If you go back, again, I started this watch list on February 1st. Here we are in June. 3 of the companies that were included in the watch list have done very well. Currently on my watch list, when you think about me adding GENK to it, there's 9 stocks. When I'm building in my watch list, I try not to exceed 10. I don't want to be thinned out. I don't want to refocus myself. So I'm happy with the watch list that I currently have. I am exposed to, consumer spending and in growth areas. So if you just tune in, definitely check out. Come on every Wednesday. I talk about stocks. I'm starting to add different IPOs that'll come up to my watch list. Companies I'm willing to hold anywhere between 5 to 10 years. I am looking for the next great restaurant trade, which that stock will come out and then bump up and be over $100. At this time, I have yet to have that success in trading in one of those areas, but I've had success in other areas where stocks grew $50, $60, $80, and so on. So thank you for tuning in today. I look forward to talking to you next Wednesday and then having more information about Twin, about SO, about SPWH, and DQ. You guys have a wonderful day, and I'll see you next week.